there is one common thread. Governments have correctly identified gold as the only antidote against their effort to build the Tower of Babel of irredeemable debt. Saturday, February 27th, 2021, Maneco 64, home of alternative economics and contrarian views. A lot to talk about today. I'll be going over an article by Jim RIckards, by a book I've recommended in the past and will recommend again. But we will focus on why gold and silver outside the system will be a road towards some semblance of freedom during the Great Reset. And that's what Jim RIckards was talking about. And that's what Ferdinand Lips also talks about in his book. And also one of the people who wrote the introductions to the book talks about. We'll look at that today. We're going to look at what's happening in the markets, the bond markets especially. We're going to look at how central bankers are already looking into doing more QE. And before we do that, though, let's get into gold, silver, the Great Reset, and how it will help us maintain freedom. And yeah, Jim RIckards, I do disagree with him on some points on inflation, but I have most of his books, and I think, yes, he's a great analyst, a very good writer. And we're going to go through this article he wrote here on February 22nd in thedailyreckoning.com. If you haven't read it, I'm going to put a link to it below in the description box. So before we go further with Jim RIckards' article, I'd just like to thank everyone for their support, for the channel, for all the new viewers and subscribers, also for existing viewers and subscribers who have contributed through Patreon, through PayPal, and in the Teespring store. That helps the channel a lot. Thank you very much. It's entitled The Great Reset is Here. Jim RIckards says, the Bretton Woods Conference of 1944 set the global financial system that still prevails today. The period 1969 to 1971 can be regarded as the first reset, which involved the creation of special drawing rights, SDR. The ticker is XDR. That's what they use in the foreign exchange market, XDR. The devaluation of the dollar and the end of the gold standard. So I've spoken about SDRs probably less than a week ago, or maybe a little longer, when I did a video about John Exter, how he wrote in 72 that the SDR was like who owes who. So the SDR is not a good solution. And I think Jim RIckards would agree with me, because it's just like created out of thin air. It was supposed to add liquidity to the system. And we'll go through this here. Anyway, it says, for years, commentators, myself included, have discussed the next global monetary realignment, which is sometimes called the Big Reset or the Great Reset. I like to point out as well, Christine Lagarde, who was then managing director of the IMF, she made a speech, I think at the press club in Washington, D.C. in January of 2014. And she went on about the number 7, about a reset. And here we are in 2021, 7 years later, and we're having the Great Reset. So some of you who think things are happen by accident, think again. And now she's the head of the ECB, the second biggest central bank in the world. Now it looks like the long-expected Great Reset is finally here. Details vary depending on the source, but the basic idea is that the current global monetary system centered around the dollar is inherently unstable and needs to be reformed. Part of the problem is due to a process called Triffin's dilemma, named after economist Robert Triffin. Triffin said that the issuer of a dominant reserve currency had to run trade deficits so that the rest of the world could have enough of the currency to buy goods from the issuer and expand world trade. Yes, that's right, because all the other countries that are not the reserve currency, they need to earn dollars, so they have to compete. They have to undercut American manufacturers and everything else to try to earn the dollars. That's what he's saying here. But if you ran deficits long enough, you would eventually go broke. This was said about the dollar in the early 60s. In 1969, the International Monetary Fund, IMF, created the SDR, possibly to serve as a source of liquidity and alternative to the dollar. So the interesting thing here is that they created this in 69, and then in 71, the dollar went off gold. Nixon suspended convertibility. So they saw it coming. So it says here, in 1971, the dollar did devalue relative to gold and other major currencies. SDRs were issued by the IMF from 1970 to 1981. None were issued after 1981 until 2009 during the global financial crisis. So just before I continue here, does this mean we're going to carry around SDR banknotes or digital entries? No. I think what Jim is talking about here is that SDRs are going to be used by nation states as reserves instead of dollars. Well, they'll still use dollars, but it will help alleviate the situation in the United States, the huge current account and trade deficits that it has to carry. And it will also balance the system out. It will not cause as many problems because the system right now is too dependent on the dollar. It will kind of balance things out. As I said, it will be the dollar, it will be the euro, the renminbi, the SDR. Testing the plumbing. So this is what they did in 2009, according to Jim RIckards. The 2009 issuance was a case of the IMF testing the plumbing of the system to make sure it worked properly. Because 0 SDRs were issued from 1981 to 2009, the IMF wanted to rehearse the governance, computational, and legal processes for issuing SDRs. The purpose was partly to alleviate liquidity concerns at the time, but it was also to make sure the system works in case a large new issuance was needed on short notice. The 2009 experiment showed the system worked fine. Since 2009, the IMF has proceeded in slow steps to create a platform for massive new issuances of SDRs and the creation of a deep liquid pool of SDR-denominated assets. On January 7, 2011, the IMF issued a master plan for replacing the dollar with SDRs. This included the creation of an SDR bond market, SDR dealers, and ancillary facilities such as repos, derivatives, settlement, and clearance channels, and the entire apparatus of a liquid bond market. You see, the fact that they are developing a derivatives market, in my opinion, just goes to show that it's not going to work for the general public. It's going to continue to be something for the bankers. It's not going to be an honest money system, the SDR. It's just going to join the fiat currency party and trying to alleviate the problems of dependency on the dollar. So a liquid bond market is critical. U.S. Treasury bonds are among the world's most liquid securities, which makes the dollar a legitimate reserve currency. The IMF study recommended that the SDR bond market replicate the infrastructure of the U.S. Treasury market with hedging, financing, settlement, and clearance mechanisms substantially similar to those used to support trading in Treasury securities today. So this is another interesting part here of how China is so important to this SDR. It says China gets a seat at the monetary table. I covered this back in 2016 when the Chinese got a seat at the table. The yuan was included in the SDR basket. Says in July 2016, the IMF issued a paper calling for the creation of a private SDR bond market. These bonds are called MSDRs for market SDRs, in contrast to OSDRs for official SDRs. In August 2016, the World Bank announced that it would issue SDR-denominated bonds to private purchasers. Industrial and Commercial Bank of China, ICBC, the largest bank in China, will be the lead underwriter on the deal. In September 2016, the IMF included the Chinese yuan in the SDR basket, giving China a seat at the monetary table. So the framework has been created to expand the SDR scope. The SDR can be issued in abundance to IMF members and used in the future for a select list of the most important transactions in the world, including balance of payment settlements, oil pricing, and the financial accounts of the world's largest corporations such as ExxonMobil, Toyota, and Royal Dutch Shell. Now the IMF is planning to issue 500 billion of new SDRs, although some Democrat senators are lobbying for an issue of $2 trillion worth of SDRs or more. They're not issuing dollars. They're just using $500 billion here to tell us the amount of SDRs. This is not going to be a dollar issue. It's going to be an SDR issue out of thin air. Who knows by whom? Well, it looks like it's the IMF. And it's just going to inflate the system even more because it's not going to be backed by anything. The SDRs. And I was reading as well that this 500 billion is going to be backdated. It's going to be for the period of 2017 to 2021. So from next year, they'll be able to issue another 500 billion for the next period, 22 to 2027. So it's amazing. They might as well have issued $1 trillion now, but it would have sounded too much. So they did this little trick of going back to 2017. This would be almost 10 times the amount of SDRs issued in 2009 and would go a long way to increasing SDR liquidity and advancing the globalist agenda of eventually having the SDR replace the US dollar as the leading reserve assets. Well, I think Keynes wanted something like that. He called it Bancor during the Bretton Woods Agreement, but he didn't get his Bancor because the dollar was still dominant. This proposal closely follows the global elite game plan predicted in Chapter 2 of my 2016 book, The Road to Ruin. So you can imagine a system that was originally devised or thought about by Keynes, how good that will be. Not. Over the next several years, we will see the issuance of SDRs to transnational organizations such as the UN and World Bank to be spent on climate change infrastructure and other elite pet projects outside the supervision of any democratically elected bodies. I call this the new blueprint for worldwide inflation. So he agrees with me on that, Jim RIckards, with the inflation. More than just SDRs, but there's more on the Great Reset than the issuance of new SDRs. Here's another breaking news story that validates the long-standing prediction for a coming reset in the global financial system. In 1999, the euro replaced the individual currencies of Germany, France, Netherlands, and Italy, and other major economies in Europe. Today, the number of countries that have joined the euro is up to 19, and more countries are awaiting admission. The euro is the second largest reserve currency asset after the US dollar. The creation of the euro can be thought of as a stepping stone from national currencies to a single world currency. So that's why the euro project is so important for these guys. That's why Draghi, who's now Prime Minister of Italy and at the time was ECB president, did everything it took to keep the euro. Because if the euro had been disbanded or collapsed into national currencies, this wouldn't be happening. Now the euro, along with the Chinese yuan, is moving quickly to become a central bank digital currency, or CBDC. A CBDC combines a traditional currency with the blockchain technology of a cryptocurrency. It's an important move in the direction of eliminating cash and forcing users into 100% digital system using credit cards, debit cards, and smartphone apps. Why are China and Europe so focused on eliminating cash? Before I go further, I'd like to say, I remember meeting one of the viewers probably about a year ago, maybe a little less or more. I forget. Time goes by so quickly. And he told me, Mario, the important thing about your channel, that it's a community. And I think he's right, because we're going to have to stick together in this small community and other small communities so that we can deal amongst ourselves outside the system. And you can imagine what we'll be using, right, to barter amongst ourselves if our services and what we produce are something that other members of the community need. You know what I mean? We can exchange, let's say, I've written an article for a magazine in the north of England, a guy who watches my channel, and he paid me with silver, for example. He could have paid me with fiat, but outside the system. So you get my gist. And that's the most important thing, I think, about the channel, is the community, not just for exchanging products and services, but also exchanging ideas and knowing that there are people out there who think like we do, kind of like outside the system. So let's continue here. It says, use it or lose it. That's why they want to eliminate cash. I've said all along that you cannot put negative interest rates on consumers until you eliminate cash. Otherwise, savers would just withdraw cash from the banks and stuff it in mattresses to avoid the negative rates. Implicitly, the European Central Bank seems to agree. One of the ECB board members says that negative rates, and Jim says in brackets, really confiscation. That's what it is. It's like a gradual bail-in of your money in the bank, will be applied as a penalty against hoarding cash. In plain English, that means they will create digital money, force you to spend it, and if you don't spend it, they will take it away as a negative rate. Now all the pieces of the global elite plan are converging. The IMF SDR issuance will liquefy global central banks that cannot print dollars. Then CBDCs will be used to eliminate cash. Once the cattle, brackets, that's us, have been herded into the digital slaughterhouse, we will be told to use it or lose it when it comes to our own money. In other words, either we spend the money or the government will take it away. So does that mean that we won't be, people like us or Jim RIckards will not play the game? Does that mean we won't be in the system? No, he's going to give you an option here, and something I've been talking about as well for years, that you need to be outside the system to protect some of your wealth, because you're going to have some of this your money in this system to pay your bills, bills that you can't avoid paying. But it doesn't mean you have to keep everything in it, or else you're going to lose it. Use it or lose it. Of course, the spending can be channeled into politically correct causes by excluding unpopular vendors such as gun dealers or controversial social media platforms from the payment system. So that's why communities like ours, the Monaco 64 community. I don't want to sound big-headed, but that's what Graham Hobbs, I'll use his name, that's what he said it was. And thanks, Graham, for that. He says, this represents total domination of human behavior through world money plus digital currencies plus confiscation. This is not speculation anymore. It's happening in front of our eyes. The Great Reset is coming fast. The future is here. Yes, I've written about the Great Reset, World Economic Forum, back in June last year, because I could see it coming. I think they will succeed in the short term. I'm not sure about the long term because it's an evil plan, in my opinion. So the article I wrote, because I try not to make too many videos about that, because I wouldn't be here if I kept doing that. So I'm going to put a link to it below in the description. I have a blog called monaco64.net and you can read it. The only solution is a non-digital, non-bank store of wealth that cannot be traced or manipulated. Given the planned dollar devaluation, it's one more reason to own physical gold and silver. Get it while you still can. So there you go. Totally agree with Jim on that. Yeah, get it while you still can. I saw a video yesterday by Bell and GP, who I've interviewed on this channel. He's got a really good channel and I recommend you subscribe to it. He talks about the premiums for physical metal. Right now, the premium for a 1 ounce gold eagle is almost 12%. It's doubled since November last year. You're going to be paying like almost $2,000 for that. And that's from a major dealer, AppMex in the US. The SCRs are coming back. They're going to issue $1 trillion over the next 4 or 5 years. So 500 billion for 2017, 2021, and 500 billion from 2022 to 2027 or 2026 or thereabouts. Jim RIckards didn't talk about that, but I read another article that that's the plan, and they could always increase the 500 billion. So now to one of my favorite books. I bought this back in early 2000s when I was actually in Switzerland, in Zurich. I went to Zurich once just to show my wife Zurich. Zurich it's a nice place, but it's very business-like, but it's still a beautiful place. So we went there, and I found this book in the bookstore. I knew about the book, Gold Wars, the battle against sound money, as seen from a Swiss perspective by Ferdinand Lips. Ferdinand Lips unfortunately died over 10 years ago. This book was written in 2001. So he saw a lot of things coming. One of the people that he was friends with was actually John Exter. He was a banker. He actually helped found Rothschild Bank AG in Zurich. So he was part of the game. But then he opened his own bank in 1987. And don't be put off by the fact that he worked with the Rothschilds, because this is a great book here. He talks about, you know, many interesting things. But I wanted to go through the introduction, and it's by Professor Antidotes, who I've spoken about many times as well. And so we'll go through it, because what Professor Fekete says in the introduction is pretty much what's going on today. And it pretty much corresponds to what Jim RIckards is talking about today, that you need gold and silver outside the system if you want to maintain a semblance of freedom, or a small amount of freedom in this digital dictatorship that we're going to have with the Great Reset. So it says, the introduction, a gold war is an attempt by the government upon the constitutional rights of the individual. Why do governments resort to gold wars? Sometimes they want to wage shooting wars without raising taxes. At other times, they want to indulge in social engineering through the redistribution of income. But in every instance, there is one common thread. Governments have correctly identified gold as the only antidote against their effort to build the Tower of Babel of irredeemable debt. So there you go. SDR is going to be the next level of this tower. You have to have a little bit of an exit from this Tower of Babel. This book is much more than a chronicle of gold wars. It is also an account of the historic failure of Esperanto money. Over 100 years ago, a Polish physician by the name of Ludwik Lazarus Zamenhof created a synthetic language in the hope of removing the curse of Babel from mankind. According to the Bible, men had become so conceited as to challenge God by proposing to build a tower that was to reach to high heaven. God's punishment for the temerity was to confuse the tongues of nations. The tower could never be completed for failure of communication due to the confusion of different languages. Zamenhof called his new language Esperanto, meaning the hopeful. However, the hope was in vain as other synthetic languages such as Ido sprang up. The confusion of tongues and the curse of Babel has remained. Calling irredeemable currency Esperanto money is apt. The biblical story may be interpreted allegorically as an admonition not to challenge God by attempting to build a tower of irredeemable debt that is to reach to high heaven. But the admonition fell upon deaf ears. Now God's wrath is upon us. Currencies of nations have been confused. The tower can never be completed for lack of compatibility of means of payment. The hope of Esperanto money to remove the curse of Babel is in vain. Other synthetic currencies spring up, such as the SDR, the euro, and so on. The confusion of currencies and the curse of Babel remains. Ownership of gold, and I would add silver as well, of course, is not about lust. It is about liberty of the individual. The gold standard is not a game. It is an embodiment of the timeless principle, pact sunt servanda. Promises are made to be kept. Official hatred of gold bordering on the neurotic appears less irrational if we contemplate that gold and gold alone is capable of exposing the ever-present bad faith behind the promises of the powers that be. The Americans who have defaulted on their international gold obligations in 1971 put great pressure on other countries that they too denounce gold. This brings to mind the fable of Aesop about the wolf that lost his tail in a trap. As he felt uncomfortable being so different from the others in the pack, he tried to persuade his fellow wolves that they too should get rid of their cumbersome and useless relic. But a wise old wolf pointed out to him that this proposal would have had greater merit if it had been made before his fatal encounter with the trap. Switzerland was the only country to point out that the American demand to shed the obsolete gold reserves would have been less disingenuous if it had been made before the dollar was dishonored in 1971. This tale, however, did not have a happy ending. Switzerland had to be humiliated for being so impertinent as to run a currency superior to the dollar. Mr. Lips has written a wonderful book for the discriminating reader who may want to understand better the challenge to God's authority involved in the construction of the Tower of Babel of irredeemable debt. Antal Fekete. So there you go. Highly recommend this. And it looks like Jim RIckards, Ferdinand Lips, Antal Fekete, ourselves are on the same page. And I said I was going to look into the markets and the bond markets, but I think it's better that I look into it tomorrow during the live stream because this has gone on for too long, this video. I know it's the weekend, but we don't want to make it a very long video. So yeah, I'll be live tomorrow, 9 p.m. London. I'll not only talk about the markets and QE, what I think is going to happen here. We've seen central bankers call for more QE. I'll also talk about the bullion banks and what their activities actually represent to the general public. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.